Inherited IRAs. CD Financial, where health meets wealth. And especially we want to talk about them because we're seeing them a lot right now. What's happening is a lot of parents are passing away from the families that we serve, and our clients are taking on these inherited IRAs. Sometimes we're seeing spouses pass away, and the spouse can take over the IRA. Two very different things that we're going to explain here. So first, let's talk about if you inherit the IRA and you're not married to the person that passed away. Okay, so an inherited IRA, non-spousal. That is going to require you to spend the money within how many years? You may have heard of this already. Within 10 years, you're going to have to spend that money down. Now, most folks will find a way to spend the money, but sometimes it's a pretty sizable IRA that you're inheriting. Now, this is what I've seen. Let's call them JT and Lorraine. JT has inherited this IRA, and by the way, it's 10 years from the year that whoever it was that wrote you in as a beneficiary passed away. So in this case, let's say your parent passed away. Let's say they passed away in January of that year. We're going to count 10 years from then, and you have that 10 years to spend it off completely, every last dollar, till you get to zero. So what I've seen is folks have been deciding to remodel now, or they wanted to remodel, and now they feel like they can afford it with this inherited IRA. They've been paying off college expenses. They've been paying off debt that they've had, perhaps from remodeling. We've seen that a lot. I mentioned remodeling twice now, haven't I? Yeah. So inherited IRAs will allow you to do that. You can pull it off. Well, you say, hold on a second, Charles. I am not 59 and a half. Can I pull money out of an IRA? You can if it's an inherited IRA. You have the privilege of doing that. Because, again, you have to spend the money in how many years? In 10 years. That's right. So if you only have 10 years to do it, they can't penalize you for pulling the money out. In fact, I inherited money from my mom's IRAs. Me and my 5 siblings and a 7th portion to the 10 grandkids, which I hold 3 of them. So, and when that happened, I always say, we bought our first home in Southern California, and 2 years later, my mom helped us buy the second home in Southern California. And I was always grateful for that. And it's more or less our dream home that overlooks down the canyon towards the ocean. Hardly ever have to run the air conditioner because we live right against the ocean. Maybe this past summer, 7 days maybe that we had to run the AC. Anyway, I digress. Inherited IRAs. It's a loving thing, but if you're not married to that person when they pass away, you're going to have to spend it down. Ooh, don't forget, when you're pulling the money out, let's say you're pulling out $50,000 for a new kitchen. Well, if you're pulling it out of an IRA, you're going to have to account for the taxes, and not the taxes from the person that you inherited the IRA from, but from your own tax level. So typically, if you're still working, you might be in a higher tax bracket. Let's say you're in 22%, and now you're pulling out that money. Make sure you watch out that you don't bust into a really high tax bracket. We're here to help you figure those things out. That's what we do with all the families that we help. So, and don't forget state tax too. So if you're pulling out $50,000 for that kitchen, you may have to pull out $70,000 to net. The gross is $70,000 to net the $50,000. But you may be in a state like Arizona where it's a flat 2.5, or in Nevada where it's 0, or Texas. Here in California, you quickly get up to 9.3% in state taxes. Washington State, again, 0. So wherever you're tuning in from, yes, I know it, that you may or may not have taxes. But remember that when you're using that inherited IRA money. Because when you're going to file taxes in April, I don't want you to get bit by the tax man. So there's that. Now, secondly, we were talking about, because we talked about inherited IRAs if you're not married to that person. But what if you're married to somebody who passes away? Now it's completely different. On that inherited IRA, you can actually absorb it in your own name and it becomes your own IRA based on your own birth schedule, and you no longer have to spend it in 10 years. But guess what? There's something you can do. You can keep it based on the birth schedule of your spouse. Why would you do that? Well, recently we had somebody who was 68 that their spouse passed away who was 65. And so we moved that money from the spouse that passed away, and the spouse that inherited it can keep it in that inherited IRA. And so now it's based on the birth schedule of the younger spouse. Why does that help? It helps because if we said 65, they won't be subject to the government's schedule or their required minimum distribution, the RMDs, based on their own older birth schedule, but in the younger spouse's schedule. And what's more is, at any time, they could take that inherited IRA and they could roll it over to their own IRA in their own name. So when it comes to a spouse passing away, the inheritance goes right to you, and you have a couple different options there. You could keep it as an inherited IRA, or you can take it on as your own money, and you're not forced to, if you take it on in your own money, you're not forced into their RMD schedule. But sometimes their schedule can help you. This is Charles Jama with CD Financial. Don't forget to like and subscribe and check out all the resources for all the different helpful hints and knowledge that we've shared over the course of time. Remember, you don't have to work longer. You just need a better plan. CD Financial, where health meets wealth.